If you want to make fast profits consistently, day after day, year after year, no matter what direction stocks are moving, there's only one chart pattern you need to know. It generates tens of millions in profit opportunities, and the gains could come in 15 minutes, sometimes even less.
Okay, let's do this. So in this video, I'm going to be reviewing Monument Traders Alliance most profitable trading strategy. And in case you don't know who Monument Traders Alliance is, they're just another online scammy trading education business that provide nothing but false promises and empty or very superficial information that is also oftentimes incorrect. But they claim once you sign up and you start buying their services, you are going to win every single day in the stock market from then on forward. Never again will you have a losing day in the market. You'll just make money consistently every single day in a row. Sounds very realistic, doesn't it? And so the two main geniuses behind this company are Brian Bottarelli, that's the guy you saw in that video clip from earlier, and then also his sidekick, Kareem Rahimtullah. I apologize if I butchered that name. But these two guys are the main faces for this company, and you'll see them on the Monument Traders Alliance website, which admittedly is pretty decent looking. They've got some nice pictures and some graphics, some good marketing gimmicks and whatnot, and they also have a YouTube channel, which is where I pulled that clip from. And of course, as you saw in that clip that I pulled from their YouTube video, it's full of nothing but just huge promises that are obviously not realistic and just common marketing tactics to try and deceive you into buying their products and services. And so again, in this video, I'm going to focus on their most profitable trading strategy that is included in their free booklet that you can download. It basically contains their 5 trading secrets that, once you know them, will somehow allow you to make money every single day in the market, guaranteed. So in a second here, I'm going to walk through that booklet and show you proof based on real trading experience and real stock market data that what they are suggesting you should do for their most profitable strategy is actually the exact opposite of what you're supposed to do. And in fact, if you were to follow their advice, you will lose money the vast majority of the time. Now also, I want to explain briefly here why I'm making this video. Typically on my channel, I try to keep things strictly educational around trading and investing, but honestly, when I come across shady, scammy online marketers like Brian and Karim, it really pisses me off. In particular because people like Brian or Karim, who my guess has never actually made a real trade in their entire lives, they are specifically targeting beginners, people who are just entering the trading and investing space, who genuinely want to actually learn about this stuff, try it for themselves, and see if it's something they want to pursue. But unfortunately, this entire space is so clouded now by scammers and fake gurus who are just trying to deceive you into buying their garbage products just to make a quick buck. And that's honestly one of the main reasons why I started making YouTube videos. I wanted to step in and actually provide content that offers genuine, real educational value to anybody who wants to learn about this stuff. And under no circumstances am I ever going to change that about my channel. You will never see me starting to include annoying hype around my trades or false promises, showing cash or rented Lamborghinis or anything like that. This channel is strictly about education and trying to teach you guys how to actually invest and trade the proper way. And I'm also not going to sit here and just proclaim that I am the genius of options trading or that I know everything. I don't. I'm still learning. I'm still testing stuff out, but I have learned a lot and I'm simply offering it back to the community. So ultimately, why am I making this video? It's simply to expose these guys for who they are, frauds. And in that way, any new trader or beginner watching this video will not be fooled or deceived by them. And having said all that, I totally forgot to introduce myself. So my name is Scott Reese and welcome to my channel where I'm here to actually help you learn how to trade, invest, and master your finances so you can then apply that knowledge in the real world and multiply your money. And so now at this point, let's jump on over to my computer now and we'll get things started. Okay, so here is Monument Traders' free booklet that contains their 5 best trading secrets that will allow you, once you read it, to win every single day in the markets. Never have a losing trading day again. Just make money every single day in a row. Even Warren Buffett himself will be on his knees begging you for your great wisdom and advice. And the very cool thing about this booklet is that it's only about 20 pages long. It's super short. So in just 20 pages, you can become the best trader in the history of mankind. So Brian and Karim are really doing you a solid by putting together this very simple, short, and powerful booklet. And so here we have the table of contents. This booklet starts off with a bit of a background story on Brian and Karim. I will not bore you with the details of that. Who knows if even what they say in that backstory is even true. So moving on to their 5 trading tips. Now in this video, I'm going to focus mostly on this last one, earnings strangles. Because with myself being an options trader, earnings strangles are my best and most profitable trading strategy. But as you will see here, what these guys are telling you to do is the exact opposite of what you're supposed to be doing. Now I did also read through these first 4 tips as well, and my judgment of their advice on these 4 is pretty much the same as my judgment on their earnings strangle advice. It's all completely ineffective or just flat out wrong. For example, with their first tip, let's scroll down a bit here. Let's skip through the backstories. No one cares about that. Their first tip is all about using a 3-minute chart. Because for some reason, the 3-minute chart is the holy grail of charting analysis. The 5-minute chart, can't use that. 1-minute chart, no way. It's all about the 3-minute chart. And as I'm talking through this video, I just want you to keep in mind this one concept. If it was so easy to make money every single day in the markets with just 5 simple tips, if it was that easy, wouldn't anybody with a laptop and an internet connection be a stock or options trader? If Brian and Karim were such geniuses, don't you think they may have been hired by, I don't know, Goldman Sachs, Morgan Stanley, any other large investment bank to trade for them? But no, my guess is you've never heard of these guys. So anytime you come across a booklet that tells you the 3 or 5 simple steps to make money consistently in the market, chances are it could not be further from that reality. So let's move on here. Their next tips are all about using certain trading patterns. Here we have the W pattern. That, especially if you combine it with a 3-minute chart, you'll just make money flawlessly, endlessly, every single day. Then moving on again, we have the M pattern down below. This is their third tip, the M pattern. This is what they recommend you use when stocks are going down. If you're bearish on a stock, just simply identify this M pattern in your charts, on your 3-minute chart specifically, and you'll make money every time when the stock goes down. And also, I just want to stop here and say the reason why I am so skeptical about pattern-based trading in general is because, one, patterns are so subjective. Anybody can look at a chart and see a pattern that somebody else does not see. And the more subjectivity you introduce into a trading strategy, chances are the worse you will perform. Trading is a very mechanical, objective process. The more black and white or the more mathematical you can make your trading, the better you will do. And then number 2, stock price fluctuations are very close to being perfectly random in any time frame. A 1-minute chart, a 3-minute chart, 1-day chart, doesn't matter. The chance of a stock going up or down in any given time frame is pretty much the flip of a coin. And I do have a video on that topic which proves this fact. I'll post a card above linking to it so you can watch it later. So that's also why I'm very, very skeptical of pattern-based trading. Sure, if you flip a coin 100 times in a row, you can try and see patterns within the sequences of those flips to see if you can gain an edge in predicting the outcome of those flips, but you're just going to be fooling yourself. There is no predictive pattern in coin flipping. It's a random process. But anyways, moving on here, I want to get to their final tip on earnings strangles. There we go. Because like I said, this is what I want to focus on in this video. So basically their setup here, their background into earnings events is that these are typically the times where stocks make their biggest moves. But of course, the big question is, how do you know which way an earnings reaction will go? Is the stock going to go up or down once those earnings figures come out? And simply stated, and they are correct here by saying this, you can't know. There is no way to actually predict what a stock is going to do once the earnings figures come out, unless you have insider knowledge. And in that case, it's illegal to trade on that information anyway. But of course, in the case of earnings strangles, direction doesn't really matter. That's also true. Let's move on here. Now here's where they get it totally, completely wrong. They're saying for an earnings strangle, you are supposed to purchase an out-of-the-money call option and an out-of-the-money put option. This is wrong. You will lose money the vast majority of the time if you try to do this. And I will prove that in a minute here based on my own real-world trading experience. And then they continue here talking about, yes, this has a theoretically unlimited profit potential. That's true. You're buying options. Long options, of course, have unlimited profit potential and, of course, limited downside risk. That's why this strategy seems so amazing. Limited losses, unlimited profits. And of course, you don't even have to get the direction of the stock move correct. The stock can go up, it can go down. In any case, you'll just make money, right? And then if you move on here, more explanation of how this works, give you a real life example. Of course, they pick out an example that does actually work out with a long earnings strangle. Like I said, this certainly can work, but the vast majority of the time, it will not work. They talk a bit about some of the advantages, and then ultimately they say, in their experience, earnings strangles are consistently the most profitable trading strategy they have. If you trade earnings strangles with us, with Monument Traders Alliance, your odds increase significantly. And of course, if you do this correctly, then you will always win. Of course, assuming that the stock moves enough on earnings day. But it sounds like the stock will pretty much always move enough because their claim here is that you will win every single day in the markets. So now let's put their approach to earnings strangles to the test based on some real life trading experience from this past month of August. So this is my personal trading spreadsheet where I track all the trades that I make on a month-to-month basis. So if I scroll over here, and I'll zoom in a bit so it's easier to see, the vast majority of the trades that I made over the past month of August were all strangles. But of course, the main difference with my strangles is I sold them. I did not buy any of these. And then if I come over here, I track a lot of metrics, so just hang on here for a second. In this column right here, I indicate which of these trades were earnings trades and which were just regular trades. So 0 means they were regular trades. And then if there's a 1 here, that means this trade was an earnings trade. Where specifically I sold a strangle right before these earnings figures came out and then closed the trade either for a profit or a loss soon after, maybe the next day or the next couple days after, but very soon after those figures came out. So as you can see here, I have 1, 2, 3, 4, 5, 6, 7 completed earnings trades from last month, and then 1 earnings trade that is still ongoing. That's why it's not in green here or red. And then the color coding here that I'm sure you can guess, all the trades in green, those are trades where I made money on. If there were any trades highlighted in red, that would be a losing trade. So yes, I did have a very good month in August. I did not have a single losing trade, and that's entirely because I sold options and did not buy options. So let's look at a few examples here. The first earnings trade I made last month was right here in this row on RCL. This is Royal Caribbean. Specifically, I sold the 85 strike call option and the 65 strike put option in the September expiration cycle. So I'll come over to my trading platform now and we'll go to the charts and we'll go to RCL. And then there we go. Let's zoom in a bit here. This was the earnings announcement date that I traded right on August 4th. And then the next day on August 5th, this was the reaction to those earnings figures. So basically I put on my strangle on this day, on the 4th, right before the market closed. And then on this day, August 5th, this is usually when you will see the biggest impact on your position based on the stock's reaction for that earnings announcement. Now again, keep in mind, I sold the 85 strike call option way up here and the 65 strike put option way, can't even see it on my charts. And at the time when I sold those options, these were like 20 to 25 delta contracts. So no, I was not selling super far out of the money options for almost nothing in credit. This was a very standard earnings strangle. Now, if I had bought this strangle, does the stock need to actually move all the way and breach one of my strikes to make a profit? No, but the stock does need to move a significant amount. And why is that? The reason why is because, one, after an earnings announcement, you will almost always, 99% of the time, see a very large contraction in implied volatility. My guess is Brian does not even know what implied volatility is, right? Implied volatility is simply just a measure of uncertainty about a stock's future. The higher the implied volatility, the more expensive the options on the stock will be. So oftentimes what you will see is leading up to an earnings announcement, you will see a buildup of uncertainty or a buildup of implied volatility. And then once the figures come out and everyone knows how this company is performing, all that uncertainty goes out the window. And as a result, the prices of all the options on RCL collapse. Now, how is that going to affect you if you bought options? If you bought options up here before the earnings figures came out, when the options were expensive, and then you tried to sell those options a day later or a couple days later for much cheaper prices, what's going to happen? You're going to lose money, right? Because you bought high and sold low. Now, of course, like I said, if the stock did have a massive move in one direction or the other, that would be enough to more than compensate the contraction of implied volatility because, like I said, this will almost always happen. So that's the main reason why you need a massive move on earnings to actually make a profit with a long strangle. The second reason has to do with the fact that whichever option the stock moves away from, you're going to suffer losses on that contract. So in this case here, if the stock moved up after earnings, that put option you bought is going to lose value. You're going to lose money on that. And so that will be partially offset by the gains you make in your call option on the call side of the strangle, but still, the gains on the call have to be more than enough to compensate your losses on the put option. So in particular for this trade, let's come back to the spreadsheet here. So in RCL, I sold this strangle for initially $440 as a credit, right? This column here shows you the opening credit or debit if I actually bought options to open all of these positions. So again, to open that short strangle on RCL, I received a $440 credit. And again, keep in mind, if you took Monument Trader's advice and bought this strangle, this is actually what you would be paying up front. And then finally here, if I scroll over a bit more to get to the outcome of this trade, I bought those options back for a debit of only $215. This column shows you the closing credit or debit for all of these positions. So ultimately, if I sold those options for $440 and bought them back for $215, and then of course factor in some commissions, that leaves me with a total profit of $222.40. And of course, this also means if you bought that strangle initially, this is actually the amount of money you would have lost on that trade, right? Because you would have paid initially that $440, and then you would have sold those options at a much lower price of $215, thereby giving you a $222 loss had you bought that strangle. Now, I'm not going to go through all the earnings trades I made last month. There's quite a few of them, but pretty much every single other earnings trade I made in August turned out the same way as my RCL position, right? I also did one on Uber, for example. Let's go back to the charts and take a look at Uber really quick, UBER, and we'll zoom in. So here was the earnings announcement, pretty small move as a reaction to those earnings figures and a huge crush in implied volatility. Had you bought a strangle on that stock for that earnings announcement, you would have lost a lot of money. Whereas anyone who sold those options, like I did here by selling the 47.5 strike call and the 37.5 strike put, this one was actually a $182.80 profit. And again, that's because I sold those options when they were expensive right before the earnings announcement and then just bought them back when they were much cheaper after that massive crush in implied volatility and also after the very, very small move in the price of the stock. And then what about the next one I did on Beyond Meat? Let's come back to the charts, go to BYND, and we'll zoom in once again. Here's the earnings announcement, very small move as a reaction to those earnings figures. Huge crush in implied volatility. Again, had you bought a strangle on that stock, you would have lost a lot of money. And in my case, as an option seller on this one, I believe the profits were, here we go, $285.40. Again, this is what you would have lost had you bought that strangle instead of sold it. And then so on and so forth. Those were just 3 of the earnings trades I made last month. Obviously, there were many more. Now, the one earnings trade that I made where the stock did actually move well beyond what was expected. Let's come back to the charts real quick one last time. Go to JWN. This is Nordstrom stock. Zoom in. Here's the earnings announcement. And this time, the stock did have a massive, massive move to the downside. We still got a contraction of implied volatility, but this contraction was more than offset by the massive move in the price of the stock. Now, I was still able to make a profit on this position because I did short shares of the stock once it breached my put strike. But this would have been the only earnings trade from August that would have actually made a profit had you purchased that strangle. Specifically, you would have made about $400 or $500. But every other trade I made, the stock hardly moved at all once those earnings figures came out. Let's go to KSS for a second. This is Kohl's. I also traded this stock for earnings. Here is the earnings announcement date. Small earnings announcement reaction, huge contraction of implied volatility. Therefore, a profit for option sellers, losses for option buyers. And one more example, let's go to SPLK. This is Splunk, and we'll zoom in again. Once more, earnings announcement was right here on August 25th. Very small move in the price of the stock as a reaction to those figures, and then huge contraction of implied volatility. Once more, had you bought a strangle on this stock beforehand, you would have lost money. Had you sold options, you would have made money the very next day. So in total here, let's come back to the spreadsheet one last time. I made 8 earnings trades in the past month of August, and let's assume I did nothing to protect myself on my Nordstrom strangle where the stock did move way outside the expected amount. So that's 1 earnings victory for option buyers and 7 earnings victories for option sellers, one of which is still ongoing. This one down here is my earnings strangle on Peloton. You can see right there. So I still have yet to close this position, but if we come back to my trading platform and we go to the monitor tab real quick, here's my position right there. And so far I'm up on this one by about $40. So obviously not a very large amount, but again, had I bought this strangle initially, I would be down by $41, not up. So ultimately, if you do some very quick math here, If you had one victory out of 8 trades, that's a win rate of about 12.5%. Does that sound like winning every single day? Or at least winning consistently and often? I don't think so. So ultimately here, if you're looking for a great way to lose all your money, then definitely sign up for Monument Traders Alliance. And so there you have it. And in closing here, I just want to say that becoming a successful trader is not about memorizing 3 or 5 simple tips or secrets. Trading actually is a very difficult profession, which is why most people do not do this. And again, I ask you, if trading was so simple, if you could really boil down a consistently profitable trading strategy into 3 or 5 secret tips, don't you think everybody under the sun with a laptop and an internet connection would be a trader? But if you take a second just to look around, most people don't even know what options are or how the stock market even works. And that's through no fault of their own, because clearly this stuff is not taught in school, which is a shame. But it's obviously proof of the fact that a simple 3 to 5 step trading strategy is just a facade. It does not exist. And if you read any book about somebody who actually created a successful career from trading, for example, this book I'm reading now, The Education of a Speculator, it's all about Victor Niederhofer. I definitely recommend it. You will learn that becoming a successful trader takes many, many years of hard work, dedication, perseverance, and a lot of trial and error. This is not something that can be broken down into 3 to 5 simple tips or secrets, and anybody who tells you otherwise is lying to you. That being said, last thing I want to say here is I don't want to discourage anybody from actually pursuing trading or investing. Yes, it takes a lot of work. It takes a lot of time and effort to figure this out, but once you do, it is extremely rewarding. Don't give up. If you keep learning, keep trading and testing out your strategy, and you stay away from anybody making false promises about huge, quick profits and guaranteed outcomes, eventually you will figure this out. It just takes time. And so with that being said, that's going to conclude this video. I hope you enjoyed it, and please let me know your thoughts or if you've got questions in the comment section below. And finally, please give this video a like and subscribe to my channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.